Good evening. Ira Epstein with your metal market wrap-up. And this wrap-up is for Monday. And we're at the 28th of February. So long, February 2022. Boy, what a crazy month. And the time about 6:50 p.m. Central Time. I'll tell you, I'm going to repeat what I've said to you now in this past 8 to 10 day period. It's a day trader's delight, these type of markets, and a position trader's nightmare. I watch people on TV constantly, oh, I'm going to be buying this, I'm going to buy, markets doing that. It just takes a convoy, and there is a 17-mile-long convoy in Ukraine headed for the capital city now. I don't know what happens when they get there. You know, as much as and as brave as the Ukrainian people are, my fear has been in warfare, why go into the city? Just train your artillery and you can level the city. That should not be the goal, obviously, but I have to tell you, that's it. We hear talk now about possible gas masks being passed out. We hear Putin talk the nuclear, not option, but he's nuclear alerts that are going on. They had a meeting today, as you know, in Belarus between, or right on the border at least, between delegates of Russia and Ukraine. Not one word did I read as to what it was, but I think it was probably ultimatums. They said that they would meet again. That's great. But in the meantime, Russia's going to keep trying to destroy the defenses and the people of Ukraine. That is what's going on. 8 members of NATO voted today. They said they would vote to have Ukraine join right now NATO. There's 30 members. You got a lot more to go. And the second problem is, if you vote yes, it means you got to vote. Attack of one is attack of all. You're right into the war. Could it lead to a nuclear war? I don't know. Nor do you. What we know is it's a rough situation. It's not getting better. Markets that get impacted, the grains, because you've got the market shut off from the corn in the Ukraine and wheat, same in Russia. That puts up U.S. prices and other grain prices in parts of the world. Energy prices, because we don't know the wild card that is going on there. So far, energy is flowing. It could stop at any point. You don't know what it's going to do. The SWIFT system has done its job. It is crippling Russia. You may not believe that, and I'm sure Russia doesn't believe it, but half their war chest is now tied up. They can't use the SWIFT system. The ruble fell 30% intraday. It'll get bounces. Everything does, but the pressure is coming on in a way that I didn't expect, and NATO has really held together well, and I think we have to give that credit. I'm still fearful. As brave as the people are, I'm very fearful. How do you live for very long in a subway? They're going to cut off food supplies coming into the city. How are you going to get them there when you're surrounded by the Russian military? We're not hearing the right things. This is a siege. It is sort of like the old days where you circle the city and you can just wait them out. They're not going to get food, water. They can shut off the energy. It's going to be a rough time, so be careful. As for the marketplace, we get the Reserve Bank of Australia coming out tonight with their monetary policy meeting. Bank of Canada is coming up on Wednesday. We're going to get Fed Chair Powell speaking before Congress on Wednesday. Tuesday, tomorrow, we get the State of the Union from President Biden. On Friday, I think it is, we get our non-farms payroll. You got a full week, and that's just those reports. There's PMI reports from other countries galore, so there's a lot to be dealt with. But this is about the metals, and gold is still holding the 1900 level. Foreign currency markets, a little bit of everywhere, to be honest with you. Copper's still staying up here at the 450 level. Copper's telling you a story. As much as they try to break it down, it finds its support. And as long as it can stay in the sideways action, it gets very interesting for when this, like everything else, comes to an end. When we look at a gold chart, it's up 1% on the first day of the month, on the first trading session of the new month. That's what I meant. Remember, tonight's session is for March 1st, and you're up $20, so to speak, right now. When you take a look at the chart, that's not looking too bad. You can see the up slope here. I think the trade is buying, and they'll probably have stops under this 1870, 860 level. What you want to see is the 18-day average keep climbing and get over that number. So even if you pull back to that zone that I call the red line, which is where markets often like to hang out as they figure next move, well, that would not have to take out that move, so you can keep the pattern of higher lows, higher highs. It's not going to be there for a while, though. As for the Bollinger Band, the big resistance, you saw it 3 sessions ago. You saw how the market hit it and let go $60, $70 like that. Now the trend is still up, as I've said. I'm showing you where the support is. And what about momentum? Well, momentum's down, so you have this divergence. The market is trying to correct on a downslope, something else. Typically, and all I can give you is what's typical, you get what's called an embedded reading. It's when the red and the blue lines are going sideways over 80 in the slow stochastic for several days or more. And when that pattern's lost, it is not uncommon for price and the closest moving average, which in this case is the 18-day average of closest, make a run at each other. We've had attempts to break down, but they get thwarted like that. Just an interesting point that I'm showing here. If it doesn't make it and this can start flattening out, it's bullish for the upside. The gold-silver ratio, as long as you stay under the 79 level, silver saying, I'm with you, I'm bullish, I want to go to this party. And you can see that right here. So the silver market on the daily bar chart, you see this gray line right here? That's the 200-day moving average of closes. Combined with the Bollinger Band, that's your resistance. So you have your resistance, your near-term support right now. If the market breaks from there, because at this point, the 18-day average at 2370, 260 is under 23, and that number of this day was 2388. Like the gold, you would do damage to the pattern of higher lows, higher highs. You want to get beyond that, and just like in the gold, your momentum is pointing down, but it never did get embedded. So different. It doesn't know that 18-day average. The one thing I think I've been very consistent on for my subscribers has been telling them in copper, don't get caught up in the noise. This market's going to act like it breaks, it's going to act like it's going to rally, and it's going nowhere. It is stuck at this 18-day average, and it's just going to stay there until there's a reason to break away from it, which may not come until we get beyond this invasion, whatever that might mean. The market needs to get to the part where the masks are off, and they are in America. I know in Chicago, I'm the happiest guy. You can go to a restaurant, you can go into stores, no mask, as of today. So that's the first sense of getting back to normal, and that will make a change. Plus, we have a lot of daylight. You're feeling good. It's not getting dark now till about 5:45 Chicago time, that's Central Time. I remember at 4 o'clock it was jet black. So things are changing. We're at 55 degrees today in Chicago. Everything starts getting better. Well, that'll help industrial markets, because out of this malaise, out of this terrible event that we're in right now, where every day it's about the invasion and war, behind the scenes, the economies are not doing all that bad. What we have to deal with, and you know it's going to come, is how do we deal with the inflation? The central banks have their hands full. They have to attack it, but they don't have to gallop at it. Again, that word transitionary, again, that word is going to keep coming up because you're losing products. Example, in Japan, they're stopping car manufacturing. In Germany, they're stopping car manufacturing because parts are not making out of Ukraine, believe it or not, other areas like that, and that it works on such a finite amount of time. You know, it's the old Henry Ford days. You get the part in, you put it in, the car goes out the front door. Well, that is basically what they're doing. They're still missing chips and events like that. Can you imagine Russia? They're not going to get much of anything for any products. The Russian people, I hope they revolt. What are you going to gain? I mean, it's one thing to do what you're doing if there's something to gain. Tell me where the gain is in what Putin is trying to do. He's not going to rewrite the maps of the world. It isn't going to happen. He has to come to that realization. If not, he'll be out because the world will get him out. In platinum, downtrend for a moment. Now, when we were up here, what did I tell you? I said, You don't fight Bollinger Bands. I know you're going to tell me, and I go back on my videos 4 days. I said, you're going to give me all the reasons why this market this time is going to not only stay over that Bollinger Band, it's going to run away because platinum and palladium are big exports from Russia. They can cut them off, or they will have cut them off, or there'll be sanctions, whatever it's going to be. So it gets up there. Well, this is what you're stuck with now. Actually, they're in a downtrend in this point in the platinum, at least this one is, until the market gets back over 10,078.60. Support's back down at 10.09. I'd be very careful about wanting to play this aggressively from the short side because, as I just said, it's not about market fundamentals. You're playing the news of the Russian invasion. You are not playing other parts. Palladium is stronger. Palladium's just gorilla glued itself. What do I mean by that? Every day you're just hitting that upper Bollinger Band. You're not doing much with it. Now, these risks are nothing short of the word insane. You've got risk where you're going thousands upon thousands of dollars. Lickety split. So if you're that type of trader, great. As I told you, I have Swiss cheese all over my body, but my brain is still working. I don't take those kind of risks. In the March dollar, at least I wouldn't tell my investors to. Is that fair enough? I don't know what I do. In the March dollar index, it's the same thing. You don't battle the Bollinger Band and say, I know it, this is the time, it's just going to keep going. Everything's there. I hear this story over and over from novices in the market. No, you play the norm. You play that when you get there, the pros are taking money off the table. You're buying the breaks until the trend is lost and you're looking to get back up there again. Does that make sense? I hope it does. Now, I drill this into you early in the mornings. At 5:20 or so, I start recording my futures video. I'm going to review 40 charts with you, but I start you off with the events of the night. So I'm up early, and I'm going to cover market upon market. These are just some of them that we're going to cover, folks. And these are some of the ETFs to just give you an idea of that. Because I know a lot of you to trade futures, you go, it's a little too risky, but I'll use the futures to trade in my ETF. I get it, but you need to see what's going on in the future, because what good does it do you to trade an ETF if you don't understand that game? That's what it's based on. Do you honestly think SPY drives the future, or the futures market drives the SPY? Come on, that's why you're using me as a pro on this. So what I was saying, you're going to get fundamental and technical analysis. I start you off and tell you what's happened. I wake up bright and early. I've seen newspapers galore, the events. Well, you go online, you can see everything you want. Then I bring it into the fundamental and technical analysis for you. The reason we do futures first is because the ETFs, the stock market's going to be driven by what's going on that's impacting those markets. Therefore, you start with that. So where do you go? You go to our website, and under the word research, this is all laid out. We also right there have our futures video for you as well. Read about that. I typically record at 5:20, 5:30 in the morning the futures. By 9 o'clock, I'm recording typically the Spider ETF video. They take probably a half hour, 40 minutes for them to get done. Why? They're about 20 minutes long in rendering time. If you know how to render it faster, I'd love to have it. I have talked to expert upon expert on this. It takes about a minute to render, a minute of video time, and we have to get the video time so it plays over the internet for you. These are not live streaming. Live streaming I could do like that. But you're going to come in and view it later. We have people all over the world that are waking up looking at this at different time zones, so it's got to be a video for them. In any case, just go to the website. You can always call my staff. They'll work with you. Basically, my tone is bullish still in the gold, bullish in the silver, neutral in the copper, a bit bearish in the platinum, friendly in the palladium market, and the dollar index on big breaks, or good size breaks, is still, in my opinion, a buy at this time. And the reason is the Ukrainian situation on the dollar. If it were just about interest rates and we didn't have that, I'd actually be a bit bearish on the dollar. And I know that's a shocker to a lot of people. I'm Ira Epstein. You have a good day.